Hopefully everyone's doing well. So we're going to be going over the top 5 robotic stocks that we're watching this week. Now we talk quantum AI, and we definitely focus on the stocks that are growing the most right now in 2025 from an AI perspective. So if you want to stay up to date on those stocks, make sure to subscribe. And JZev's in the chat. We see Shanto's in the chat. Appreciate you. Thanks so much for tuning in. We're going to jump right in here and we're going to do the full analysis. So this is kind of our robotics watch list, and we have a few different companies that we're covering right now that we're going to focus on exclusively. The first company is going to be Symbotic. Now, Symbotic is ticker symbol SYM. Pull it up here. And they've been on a run recently. Excuse me. You see that they've made this run up here into this $64 range, and they have really started to grow since their IPO back here. We've seen them get up into that $64 range, now kind of near a previous high. So what they do is end-to-end AI robotics system for what is Albertsons, Target, Walmart. And if we go, we take a look at their company, they have these commerce robots that basically are able to help big warehouse companies like, let's see, Unfi, you got Target and Walmart or Albertsons, convert some of their back-end warehouses that they have into basically full-scale e-commerce. And so Symbotic, SYM, is a stock that has really seen a growth in their market cap to about $32 billion over the last few months. Now, part of the reasons they've seen so much growth here recently is because their revenue has really increased, and they've signed some large deals with what was Walmart. So they signed a $500 million deal with Walmart to provide the robotics for their back-end warehouses. So we see their revenue and assets have been growing tremendously. You can see that their revenue has been hovering around $500 million per quarter, which is not small for a robotics company. And they could easily, tap into a 50 to $100 billion market cap in the near term. Now, you might have heard some packaging in the back. My wife was just doing some unpackaging of things. Hopefully it's not too loud, but you know what she was unpackaging? These things right here. Take a look. It's a Stockmate mug.
Gorgeous.
Take a look at it. It's our Stockmate mug for coffee. So normally I have a nice mug. This is my mug normally. We got other mugs, but this is like a mug I was using today. But this mug right here, this is for our top Stockmates that we send out. Not only does it have the growth logo, the M logo, it's also got this right here, which is the dollar amount and percentage amount for your stop loss, and the dollar amount and percentage amount for your take profit. So I need an expo. Oh, I have an expo right here. Perfect. So basically, imagine we're taking a trade here on Symbotic stock. This is super exciting. And I go to take a trade. And normally, like let's say we were buying right now. Okay, so we'll get into the technicals here. The market they're in is growing, the revenue is growing, they have some good partnerships. They are starting to see their earnings really spike up recently. And so let's take a look at their chart. Let's say that they're on this uptrend right now. So this is Symbotic stock. Once again, this is our one of our top 5 robotic stocks. So this is how it looks. So normally, what do we do next? We would go over to Stockmate. Maybe we're in the trade profit calculator. Matt Evans dropped that link recently. And what do? We type in our purchase price. So let's say we were purchasing right here around $56 a share. So let's say we're buying it for 56 bucks. current price, let's say it's at like 56.50, and I don't know, let's say we have 1,000 shares. So this is a calculator you can use as much as you want. We give it out to everybody on YouTube. I coded it, so you can use it as much as you want. But let's say we're going for a 10% margin. So now we have our stop loss. We might set it on our chart, but also let me write it here. So I'm doing a 2% stop, and I'm doing a 10% gain. So take a look at this. Let's say I jump into this trade here. I'm looking for what would be a 10% recovery on Symbotic, this robotic stock. Let's say 10% swing would be up into about $61 a share right here. This move, kind of the continuation of the trend. They recently had earnings. They dipped right here, and you could see them start to make this recovery. Did they recently have earnings? Let me just double check. We released our earnings reports for last week, and if I'm not mistaken, yep, they reported earnings. You can see in StockMate, we had them reporting earnings Wednesday after hours. So take a look at this. I wrote on my cup, imagine I'm having coffee this morning, and I could see 10% margin for profit and 2% stop loss, or I could put the dates. And look at this, I got some quotes here to read on the mug, and it says, having a plan equals success. Your progress equals success. Managing emotions equals success. Locking in profits equals success. I love it. So we'll be using this cup, and we send it out to all of our top members inside of StockMates. If you ever want a free cup for being a member, one of the top 3 members here, or you want a free t-shirt like the one I'm wearing now, we send it out to all of our StockMate members for our daily live trading. It's the second link below. Now, I didn't expect to share this with you, but it's so awesome because every time we get new merch that comes out that we design and we kind of like fine tune when it comes in, it's exciting. So it just came in for the first time, basically. So Symbotic stock is, again, we're kind of watching this trend, right? It's on this uptrend. It's trying to make this run here. We kind of look for this 10 to 15% margin for profit. And again, if we did have a plan in place at a 2% stop, we'd be looking to manage risk somewhere around $54. We'd be looking for a growth of up to 15% here on the stock. So why would we see that growth? Well, they're having some consistent growth in their revenues. We see them increasing. Their balance sheet looks disciplined, and their total assets are up 26%. But one thing to note too is the company's unique positioning. Walmart has been trying to go e-commerce for a while, but the struggle is they have humans that are back there in the Walmart. Maybe they're not as motivated, maybe they're not getting paid a whole lot. And are they going to do the type of service that they could make sure that all of the stuff in the Walmart is getting packed up and sent out, and the e-commerce that goes into that? They're basically saying, let's just put some robots in the back with our inventory and automate all of our e-commerce here. So Walmart's one of their big paying customers, and they use AI powered robotics forklifts along with large language models that allow for the companies to manage all of their inventory as well. So they're definitely onto something. They're a robotics company that I could see really taking off into the future. And so that's why we have them here on the list. So I'm going to pull up the chat. I was hoping to see what we had going on. What's up, Johnny? You got Dinesh is here. Jose, happy to have you here. APLD, that one's not so much robotics, Jose. RXRX, an interesting one. I'm not sure. It's not related to robotics, but I appreciate you tuning in. Thanks for tuning in. So here's what we got going on. So number 4 is going to be this company called Teradyne. And their ticker symbol is right here. It's TER. Teradyne's been on a similar run. They're a robotics company. They're kind of near an all-time high. They've had this run up from about $75 a share here up into this resistance here. Maybe a little more on the overbought side. You can see the RSI and the MACD looking a little overbought at the moment. Trying to, consolidate, make this run up. Now, why are they one that we have here at number 4. Well, part of the reason why we have them here is because of their growth in their products. So we'll pull up their stock here, and we'll pull up Teradyne here. Let's get a look here. So you can take a look at the robotics that they have offered. They are powering, they have electronics tests, advanced robotics for AI powered robotics platform, and they are working universal robots, and they have a few notable partnerships here. You got them here, ITC San Diego. That's something they're doing a conference there. Semicon, there's another conference. We've seen some of these companies at the conferences, and they have these applications for semiconductor tests. They have them for memory tests, for defense and aerospace, and they're building a lot of manufacturing materials and even some what seems to be some semiconductors, which is a nice market for them to be in. Now, when we look at their stock, they're about a $17 billion valuation as of now, and their PE ratio is at 37, so not too bad. And when we look at their revenue, the revenues have been holding pretty steady, maybe declining a little bit in the last year or two, but holding pretty steady around $2 to $4 billion per year. And their net income is positive, so they're making money. They're not losing money. And their balance sheet is very disciplined as well. You can see very consistent balance sheet. Their total assets outweighing their liabilities, that orange there, and that's what we're watching here. So product offering seems to be good. They have a lot of foot in the market in different industries. When we look at their stock right now, again, they've been on a run. They kind of look like they're at a high. They recently surged up to about $108 a share. Couple things to consider. Whenever we're looking at, the patterns, the trend, we're looking at previous resistance here acting as a support. That is a bull trend. So previous resistance here acting as a support. See that? So you got this previous resistance again, trying to act as a support here. We had them drag out here. You have this resistance here acting as a support. And so they're kind of, stair stepping up into new highs. And it's an interesting stock to follow because right now their market cap is about 17 billion, which they're bringing in about 3 billion a year. So their market cap is fairly relative. It's not bad. It's a little tiny bit low compared to what we've seen for most robotics companies bringing in what they're bringing in. Like for example, Symbotic, they weren't bringing in as much, didn't seem like on an annual basis. They're not bringing in as much, but they're double the market cap of Teradyne. So Teradyne is about half the market cap of Symbotic, but is making basically about $150 million more per quarter. So as a robotics company, they're seeing a lot of momentum. Now, I can imagine they could continue this run. We're kind of looking, there is a resistance here at about $110 a share, and they're trying to make this run up into about 115. Now they might get rejected, sell back to 102. That would be a better entry, and if that was the case, we'd be looking at something like this, about a 10 to 20% margin for profit there for Teradyne. Now, long term, I think they're going to be a great company long term. Short term, you just look at the RSI here, look at the MACD. So oftentimes, when something is bullish, it's going to be holding above this 200-day moving average, this green line. See how that green line is almost acting as a support there? And when it goes bearish, it's kind of acting as a resistance here. It did just break out, and it just kind of is struggling now. It's like, is it going to hold above the green line? Is it going to continue? It's also at a resistance there. And the RSI here and the MACD are a little bit on the overbought side, which would indicate more of a sell. So you can see like down here when it dropped to $85 here, that MACD and the RSI were very oversold. See that RSI way below the 30? That was more of a buying opportunity. And then when we saw it spike up here, see that RSI MACD, according to it, that was around a sell point up in that $112. So we see it kind of consolidating here now from left to right, which we got to watch closely. Again, I wouldn't personally enter it right now, but they're a top robotics company. they're doing these semiconductor tests, and they have kind of dual exposure. It's like they're doing the industrial automation, but they're also working on the semiconductors. So you kind of get a mix of semiconductors and robotics, which I think is a really, really good market. Think about it like um, semiconductor manufacturing, like that's a really good market. And so with AI fueling their robots and them coming in with revenue that has been mostly beating their revenue and continuing to see their earnings continuing to rush up in this $100 range. I think they're a pretty good long-term play, and that's why we have them there at number 4. Now, I don't actually have a perfect map out for the order of these, but we're going to jump into the next one, which is Serve Robotics. So Serve Robotics is going to be related to. So Nam says, can you analyze UMC stock? Definitely can do those. We could do some more analyzations. In this one, we're doing the top 5 robotics ones. I appreciate it, Nam. Thanks for tuning in. I see Kush's comment. I see Steven. Thanks, Clayton, for tuning in. Hey, Clayton, how's it going? Appreciate you all. So, Serve Robotics. Serve Robotics is a company that specializes in a robotics approach that is heavily backed here by Uber. So if you search Serve stock, we can jump up. We can also search serverobotics.com. We'll hop in there. Why deliver 2-pound burritos in 2-ton cars? And that's, an exaggeration. Like even is it really 2 pounds, the burrito? But anyway, in 2-ton cars, they have these robots that they are deploying into major cities across the US, and they're just rampantly running around threatening US citizens. No, I'm just kidding. They are deploying these robots, and they are basically getting the food from the restaurant. They are going directly to the person via Uber Eats, 7-Eleven delivery, and they're also partnered with NVIDIA for their robotics. And they also have Delivery Hero. So I've actually seen these ones firsthand. So what do they say? Like, if there is something that changes the way you chew gum, or that you see it firsthand, that's a really good market indication for an investment. And that's exactly what I've seen. I've seen this firsthand. I've seen it in person. I think it was in Miami. I think I saw it as well in, maybe it was San Francisco or Scottsdale. And they're kind of putting out these robots into the market. Now, from a financial perspective, they're still under $1 billion market cap at about 598 million. The total addressable market really that they're going after is up in that $20 billion range or higher. So they're definitely up there. If you deliver Uber or you deliver DoorDash or something, you're probably, not going to like this. Definitely could put you out of a job for the most part. But if you put some of the earnings that you make from DoorDash or whatever into this, then most likely you will come out with more money. It's kind of funny. It's like back years ago when I was working in solar, and all of our paychecks we were putting into like tech companies and even the solar companies, and we made more money in the entire time that I was working there from the stocks we made than the entire time I was working there. And so maybe that's the focus for them. Now, from a startup perspective, where they're at, they have a ton of cash, about $216 million, which is, again, about half of their market cap. But their income has been negative. They've had very negative net income, not super negative, about 40 million, with just a tad bit of revenue. So they're a startup. They're working with Uber. It's interesting. They're even public, but they are. And we start to see them gear up for their Q2 earnings here as well. Looks like reports maybe came in here on Friday, and they came in with some earnings, and they had a Q2 loss. A little bit of a surprise there. And so maybe that was this pullback. We recently saw them pull back a little bit the last few days. So they are now trying to continue this trend, continue this market cap build. hold this. It looks like previously we had a support here at about $10 a share, and we're looking for them to continue this run up into this $14 a share. Now you might say, well, they don't have revenue, so would we buy them? They're very much a buying what could be. They're pretty small market cap, under a billion, about $500 million. They are, again, backed by Nvidia and Uber, and they're doing these deliveries, which I think could be a really big hit. I think it could be something. I've seen them in person. It seems like they're doing fairly good. So, when it comes to their market, if they become the market leader, we're talking about a revenue potential of 10 to 20 billion dollars a year, which could definitely put them into a market cap of easily 20 to 50 billion. So they are very small still, and that's why we have them on the list. So we're going to watch closely on the near term. We'd be looking for a swing like this between 10 to 40% upside. We would want to manage risk tight as they're very low market cap, and I would urge caution. Eric had an LOL there. Appreciate you, man. I'm not sure what you were laughing at. Maybe it was I'm not sure which joke you're laughing at there. Alex, good evening. I appreciate you. Thanks so much for tuning in. So, we got Serve Robotics. And now the next one that I want to introduce here is one that's really trying to have a hard turnaround. And I don't know that they're the most, valuable. It's called iRobot. And they've really sold off. They aren't the most valuable. They've actually pumped up to 197 in 2020 and then just kind of dumped down here. And they're kind of just selling off, and they've sold off continually. And they're down to about $3.85. Now, just because they're a low price doesn't necessarily mean they are a good deal, but being at the low price that they are, it's worth a look to see where they are. The market cap's 100 million, so very small. I think they specialize in some of like those Roombas, right? The floor cleaning robots. It looks like their quarterly revenues have been kind of declining. The annual revenues have been declining. We had them on the list because they were an interesting one for us, but at this point, things not looking too good. Most likely won't be following them because the total assets are actually lower than their liabilities, which now puts them into a red deficit mark, and they have been losing money. So I have them on the list. I wanted to touch on them, but after looking at the financials once again, don't think we're gonna actually put too much into them. They got some concern really. The cash balance and the gross margins, maybe they could make some progress there, but the only reason why it might work is if they have some brand equity. They continue to build out their brand. I know some people like the iRobot brand and they like opt for it, and they're able to convert that into more of a strategic go to market plan and come out with different products, and they have the brand to back it up. But other than that, their liquidity is not so shored up as their assets are kind of lowering and their liabilities are up. So they're kind of in some distress levels right now. So probably not the best buy, but definitely worth a look at the moment. But I would urge caution as they're just $100 million market cap there. So the next stock we want to look at here is going to be the final one. This is going to be Intuitive Surgical. Now this is a basically gold standard of medical robots, and their ticker symbol is ISRG. Intuitive Surgical. They're already at $168 billion valuation, and their quarterly income statements have been pretty good. Oh, Eric says the robot's robbing people. Yeah, yeah. I mean, that's what's going on here too. No, it's like these robots were good, but their financials have gone bad ever since they started intentionally performing bad heart surgeries. No, I'm just kidding. They've had really good accurate surgeries, and they are a company that has these it's Intuitive, not Machines. That's a space company. Intuitive Surgical is what it is. And they have these, it's the Da Vinci 5, I think it's called. Yeah, Da Vinci 5. most advanced and integrated platform we've created. So actual surgical skills from the robots, and these robots are performing surgeries that humans, they're actually outpacing the performance of humans in certain cases. And they've really come out with a lot of new different surgical products here, and they are using them in many different instances throughout a lot of healthcare and hospitals uh, that are being installed basically at these different hospitals. So why is it winning, and why are we seeing their financials look really good with $20 billion in assets? They're seeing their revenues go up annually. They're increasing. I mean, very simply put, we look at the stock here. Let's jump into the chart here. They recently pulled back from an all-time high of $616 a share. So you kind of see this was the trend that they were essentially running. Not the most beautiful lines, but you kind of see what I'm talking about here. So they're on this uptrend here, and they're trying to basically hold this level. Now, with their surgical robots that they have, they're taking on big industries. And as you know, surgeons, they get paid a lot. And if they are continuing to build out their network and get more hospitals, and they have these economics that seem to be very profitable for them, there's just going to be more surgeries, more growth in that sector. It's a really good market, right? So when it comes to, building out high growth core, like probably more of the stability robotics companies would be like this ISRG, like most likely to kind of grow over time in a large cap setting, getting up into, at one point will probably make a full recovery of about 30 to 50% margin for profit there. So they're at a support, they're kind of having this uptrend. RSI MACD looking more like a buy at this moment. So they're more of like a long, stability and cash flow quality play. They're premium in that they are seeing a lot of profits, but they're also, pretty anchored in a market that's growing. And so they're going to be durable as a long-term company. Now, when you look at like high growth stocks, Symbotic seems to be on that list. Definitely Serve Robotics could be on the high growth list, a little bit higher risk. But if we see that automation and autonomy kick in for Uber, that's going to be a big deal. And Serve Robotics could be one of the main players there. When it comes to Teradyne, the other robotics company we went over, TER, they're kind of a cycle lever because they're kind of like, if semiconductors are doing really good and they're also in that cycle of the market, because we've noticed that semiconductor markets have been cyclical, that they could see a spike like they saw back in 2022 up to this $168 range. I mean, their financials haven't really slowed down. They've been making higher highs in this trend, and so you kind of look for a little bit cyclical nature of the stock, but about a 50% recovery to highs or a 30% recovery to some of the levels we saw back here in 2025 at the beginning of the year. So, and then of course, like if we're talking speculative raw, like lottery tickets type of stock that I've covered here, it's definitely going to be iRobot, IRBT, only because like it's something that you wouldn't want to invest in unless you're comfortable with a turnaround or like serious concern on the risk, because again, their market cap's at like 100 million and they are pretty high risk. But both of them, I wanted to keep it balanced, kind of show some solid long-term plays and also some stability, and also high growth companies as well as some speculative ones that we included there at the end. And so we're definitely going to be keeping an updated list and adding to a robotics list. If you guys have companies you want to add to the list, by all means, comment the ticker symbols. Appreciate you all. Thanks so much for tuning in. Steven, thanks for tuning in. Boston Dynamics. Yeah, it is very interesting. Like Nvidia is going to be a solid long-term growth play. Kwong, thanks for tuning in. Rich Tech Robotics, again, more of a lottery pick. Their financials aren't adding up. It's kind of a Hail Mary there for that company. I was between including them or iRobot, and both companies were kind of on like the fence of extremely high risk. So I would put Rich Tech Robotics in that conversation too. Appreciate you all. Thanks so much for tuning in. If you want to tune on into our live sessions, we're having them actually on Monday at Market Open, 6:30 a.m. Pacific Standard Time. We'll be having some new targets come out for this next week. We had targets for this last week that did quite well for all of these earnings. So if you want to know pre-market, after hours, which companies are reporting, and get daily live trading sessions where you can see my entries and my exits. We had some good trades recently with AMD. That one's up 68%. APLD, which is a data center company. Rigetti, definitely Big Bear AI. We got some calls there that were up on Friday, and we're going to be watching earnings on Monday. NVIDIA, and investing in quality AI companies that are set to grow over the next 18 months. It's kind of our focus right now, as well as quantum, space stocks, and general tech, and some defense companies as well. So if those are the types of markets you want to get the free t-shirt like I'm wearing, and also get a chance to grab this free cup that has a trading plan on it that you can mark up with an expo while you're having your trades in the morning or investment overviews of the market, then I would encourage you, again, check the second link in the description. Would love to send you a free t-shirt and have you there at Market Open on Monday. We got a huge sale there. It's recurring that you get the lifetime that you get the live sessions every morning, every day, Monday through Friday, and it's separate from YouTube. So it's not here. It's in another place privately, and it's recurring Monday through Friday that you get to see our live sessions. Now, right now, you can get in without a recurring payment. Actually, is lifetime access, one-time payment if you want to join. And on top of that, we've been doing some studies, and we have over 24 millionaires inside of StockMeet. So really excited to announce that. One of our recent members that joined today, actually, his name's Evan, and he is getting ready to retire soon. He's about 36 years old, and he is almost at the $1 million mark. He's gravitating. He's almost between it, and he said, Will, this is gonna be where we're gonna get above that 7-figure mark. So anyway, appreciate you all. Wanted to give you that friendly reminder. And if I earned it, smash the like button. Do consider subscribing. And I'll see you guys in the next video. Take care.